Today, I want to talk about nominal prices versus real prices and why you may want to take a look at real prices sometimes. Even though, as appraisers, we deal with nominal pricing uh, when we deal with market conditions changes, appraisal reports, we actually want to know the nominal price, the price that includes inflation. So that's what I mean when I say nominal versus real. I want to know how has the price changed, and then that's nominal prices. Just how has the price changed? Real prices says how has how have prices changed when I remove the impact of inflation? So if I hold the value of a dollar constant, so what does a dollar actually buy? If I hold that constant, then I can see a few things that are actually helpful for us as appraisers analyzing a market. So let's look at this. I'm going to remove myself from the screen and we can take a look at the blue line. That is the nominal price. This is a data set for a market, and I thought it was really instructive for this difference. And so what we're looking at here is the blue line. You can see there's been some ups and downs over time, but it's been fairly consistent. But when we remove the impact of inflation, you can see that the same market has been more or less consistently declining over the same time period. So that's the impact of inflation. So in this particular market, the stability in pricing is actually because of the deflation of the dollar. Let's look at that in percentage terms. So this is the same graph, but what we're looking at over here on the y-axis is the percent change. And so we can see that if we're starting our point at the beginning of 2022, when we were sort of in the middle of the run up to the peak, if we're looking relative to that point, you can see the end of the blue line here. That's around 7%. So a 7% increase relative to that point. But in real terms, what has the real pricing of real estate done if we hold the value of the dollar constant? It's actually about a 6% decline. So why do we care? Why is this helpful? This can be helpful because when we're looking at the elements of supply and demand which feed into pricing, it's really helpful to know that, hey, when I remove inflation, what the pricing has done is actually much more consistent with changes in supply and demand. So, example, the market that we're looking at right here is one where I've had consistent increases in inventory over this time frame. And it can be maddening to see that I've got really increasing inventory, demand has been stable, and economic theory tells me that if I have a shift in supply and I don't have a shift in demand, prices should fall if that shift is upward in supply. So when I just look at nominal prices, it can actually make me a little bit crazy. Prices should have fallen. I'm looking at all the details of this market that tell me I should really be expecting a fall in prices, but what I'm actually seeing is over this long term, increasing prices over the span that I chose here. But then generally, if I'm looking, that there hasn't been a lot of change past 2022. And so this can really help me to see that, hey, actually my market has declined. It's just that the deflation in the dollar has masked that decline. Now, what do I report to my clients? I'm only dealing with nominal prices, so that's fine. I'm reporting, maybe stable prices, but how I can understand what's been happening in the market when I need to explain how has the increase in inventory over this time impacted prices? I can say On a real basis, prices have fallen, but the market has been stable because inflation keeps propping up that price. Another way we can look at this is, I think this is a helpful graph when we look at the narrative that we might be seeing reported in the news. Each one of those red dots is a time when, if you look at year over year pricing, where nominal pricing was either flat or increasing, or really just above zero, and real prices were down. And so this would be those times when, as far as what the news was reporting, hey, prices are up 2% year over year. Things are actually going really well. Well, I might look at that and say that doesn't feel right for my market. And your feeling is actually pretty accurate. So the most recent data point here would be a good example. Hey, prices are just ticking along just a little bit higher, maybe 1% above what they were year over year. But really, real prices are about 2% down during that same time period. And so that's the impact of inflation. So that can be really helpful. I hope that this way of extracting inflation from your pricing in order to really understand what's going on in the real estate market, specifically if you hold the value of the dollar constant, that can be helpful to really understand what's going on and why prices may be stable or even increasing when some of the fundamentals of the market may suggest a market decline. It's possible that what you're noticing is just inflation.